Good morning from Chicago, traders. It is Tuesday, July 15th, 2014. It's 8:15 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick rundown of the overnight session. The key numbers came out in Europe, and if you look at the overnight chart on the S&P minis, you'll see a reaction to those numbers at 4 a.m. Central. The German July ZOO expectations misses by a fair amount. Came out at 27.1 versus 28.2 consensus. The Eurozone ZOO survey also missed 48.1. Previous 58.4. UK June CPI is higher than expected year-on-year, 1.9%, consensus 1.6%. June 2013 food and clothing discounts not repeated this year. Yesterday, commentary from Fed's Yellen to New York Magazine. The economy will require unusually accommodative monetary policy even after it is back on track. Man. Wish the Fed would just step out of the way and let this market trade the way it needs to. Egypt makes a proposal for ceasefire in Israel / Gaza. Israel approves this ceasefire proposal, and the Hamas government is still considering it. U.S. retail sales came out, advanced 0.1 versus 0.6, a little bit worse. U.S. Empower Manufacturing 25.6 versus 17, better. U.S. Import Price Index came in at 0.1% versus 0.4. Looking ahead, what we have left is U.S. business inventories at 9 Central for May, expecting 0.6%. That's pretty much it as far as the calendar is concerned. At 9 o'clock, we have Fed Speaker Yellen. It gives her semi-annual testimony to the Senate committee. That's at 9 o'clock, just a half hour after the open. And then at 10:35 today, Central, all-time Central, 10:35, 11:35 Eastern, President Obama delivers remarks on the economy. So the market will be listening in on that. Earnings after market include Intel, expected at 53 cents EPS. And then as far as supply data, we have a 10:30 4-week bills for 25 billion. So that pretty much covers everything that we should expect for the day and what we have seen tonight as far as headline risk. I'm going to make this Trader Bite very, very brief to allow everyone to kind of settle in before the market opens. But I don't have much to add to yesterday's commentary and plan. Hypothesis remains the same. Yesterday actually accomplished nothing. Yesterday traded an awful lot, suspiciously like a holiday. But just to go over it, to answer the key question we have to answer as traders of context, the market gapped up. It opened at 71.50. We left a gap behind down to 62.25. Zone gap at 63. And what it did is it tested the expectation was it would take out the overnight high early. That was my primary hypothesis, which I think I posted somewhere. I might have posted it. I don't remember. Yeah, my primary hypothesis here. I'll show you it. Primary hypothesis, we expect a gap likely to test overnight high early, give weak overnight high to find responsive sellers. Responsive sellers expected around 72.50 area. What did it get to? It got to 72.50 right here, expecting responsive sellers at 72.50. To push back to 67.25, 66.50, and what it did is it pushed back to 69.75. It just it could not find any real sellers. Later market pushes to 19.75 to retest the key LVN at 75, and it did not. It ended up pushing to 74 even. It missed by 4 ticks. So close but not there. Successful test of 1975, likely to push through to 77.50, new all-time highs expected today. That was the primary hypothesis. Next target up 78.75, 79.75. Secondary hypothesis, responsive selling fails to push lower in a meaningful way. OTF steps in to push to 75 immediately before backing off a bit, likely to then continue to 77.50 and then 79.75. The tertiary or the third hypothesis, initiative buying fails to make any meaningful progress. Sellers step in and push back to 67.25, 66, and then 64, expecting market to base in 63, 65 area before buyers step in later to continue trend up from last 2 days. So hypothesis number 1 was the closest, but we couldn't really accomplish anything. We did get the selling at 72.50 as expected, rotated to 69.25. We had an open auction out of range, two-way trading, short-term trader in control, no push, no higher time frame, no interest from a higher time frame trader in this situation. The market sat sideways, and it was just awful. An awful trade yesterday. It's just the picture-perfect summer trade, almost with a holiday superimposed on top of it. We have a normally distributed profile, a little bit of a skew down. So the expectation overnight was a break lower. This was a pretty weak low, and we did get the break lower to 67.25. Remember, 67.50 is what I had mentioned as the target below 67.25. There it is. Responsive sellers back to 67.25. 67.25 is the overnight low, as you see there on the chart. And then the market turned around and pushed back up to 74.50 in the overnight session, and now trading 72.25. Yesterday didn't accomplish anything. Very tight day. Very low volume at 846,000 versus 1.2 million expected for this time of year, 1.1, 1.2 million, so pretty light. We saw it here at stage 5. There was very little volume going across our risk system. Just a slow day overall. Let's look at what the overnight did. So that's what we did yesterday. We basically formed balance, short-term traders in control, did not see an intermediate, did not see any long-term traders taking positions yesterday. Nobody really of any significance interacted with the market yesterday. Overnight, open where we close, test higher, the value high of the prior session, and then just sit around until the European Open, pulls back down, puts in a weak low at 70, pushes to 72, breaks the weak low, and then just sits around until the ZOO number came out at 4. The ZOO pushed to 67.25, retest 67.25. Very, very poor low here, very weak low before the market picked up at 6 and pushed to 74.50. I believe at around 6 o'clock is when the ceasefire information came across from the crisis in the Middle East. Not sure if this is what caused it, but not seeing anything else on the news feed at that time. So we pushed to 74.50, and we're stuck in this very boxy profile with a very, very weak low. So this low is suspect. It is against our key area at 67.25, I'd mentioned from the notes from yesterday's trader bite. Right here in the LVN, this is the area that was supposed to be, that was expected to be tested during the day. It was tested at night with a weak low. So we'll watch out for that. A failure, as far as I'm concerned, a failure below the swing low at 70.25, likely to target 67.25, and very, very likely to take it out by at least a tick, looking for 66.50 as the next area to test down, so just 3 ticks before the market will likely find support and then chop for the rest of the session. Okay, so that's the way things are shaping up today. Nothing really to share with you on the longer term charts. Everything is pretty much on hold Kind of like when you look up at the Chicago skies and you see these airplanes going in circles over O'Hare, everybody's in a holding pattern, and that's what we have here in the market. I want to remind everyone that we're featuring a guest trader today, Stephen Kelly, on our Convergence Tuesday webinar. It's a trader spotlight. We do these every once in a while on Tuesdays. It's open for everyone. So look for my Twitter feed for the invite for that. We welcome questions, and it's just basically in the actor studio type of interview discussion of trading and how Steve approaches the market and so on. Steve has his accounts with the brokerage I'm associated with at Stage 5, and we know that he trades live, and we just want to pick his brain on how he trades the Bund, sometimes the Euro stocks, the ES, and the notes, and he monitors the NQ and other products. So we want to pick his brain just to give somebody else's perspective on how they're approaching the market and what they're doing in the summer doldrums and so on and so forth. He's got about 12 or so years experience. So we look forward to having you for that. That starts at 3 o'clock Central, 4 o'clock Eastern. Again, look for the link on the Twitter feed if you're not part of Stage 5. Otherwise, you'll get it in the newsletter. That's all I have for you for today. No additional headline risk, nothing further to say other than please be patient. Please be patient. The NQ has had much better opportunities for the risk. There's always risk to trading futures, but just much better rotations. I see as long as there's rotation, there's opportunity for loss and opportunity for profit, and I feel like there's just a much better way to make money than to watch the ES all day long. Not that I want to encourage people to drop product they've been watching for years, but I don't see this as a viable product, especially with the range that we had yesterday of 4.25 points for the day session. I see this as a very poor way to try to scratch out a living when there are other products that are moving around with almost an equivalent ATR risk value. So you might want to consider just keeping an eye on the NASDAQ. It's a very familiar product, and it's very correlated to the ES, but actually moves. It's thinner, so there's more slippage and so forth, but at least you get the rotations and you get the structure that you can trade against. Good luck today, and I'll catch you tomorrow.